is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom. How's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Good from TFNN. Welcome to the May 23rd. Terrific Tuesday edition of the Tom O'Brien Show. I'm your guest host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls, the bears, the buyers, and the sellers are communicating to you and I just past 3 o'clock in the afternoon on the East Coast. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. 877-927-6648. Of course, you can send me an email, steve@tfnn.com, inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. Again, I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 62 points at 20,957. S&P is up 6 at 2,400, even Steven. NDX 100 up 3.5 points. She's trading at 57.02. Russell 2000 up nearly 6 points. That's trading at 13.82. Semiconductors struggling just a bit, down 0.5%. Trading out at 10.66. Otherwise, everything is mean and green. And in the case of metals, it's not so mean and green. You've got gold down $10. That's a result of the yen. We'll go take a look at that correlation. The silver is off 14 cents, trading at $17. The same thing there as a result of the yen. Bonds are down as well. Again, a result of the yen. The correlation is direct, very specific. And so we'll take a look at that. Leading the charge here to the upside, you've actually got Bitcoin up $41 or 17%. Bunge Limited, that's on a buyout deal. Google's up $7. Mercado Libre's up 7. Transdigim Group is up 6. To the downside, AutoZone really taking it today, getting cleaned out, down $73, a little over 11%. Alexion Pharmaceuticals off 9.25% or nearly $11. Nordson Corp down 8 something. O'Reilly Automotive off 8. Advance Auto Parts down 7. So they're getting hit. Herbalife is down about $5 or 6.5%. But let's start off by taking a look at the indices out here. Let's start by taking a look at the S&P 500 as Tom does. So we'll punch that up on our chart here right now. If you're watching us on Tiger TV, you've got the daily chart here for the S&P 500. Now what we can see, trading right around 2,400. The actual swing point that it's gunning for is the March 1st. Now, that March 1st high is 2,400.98. The actual high today, 2,400.85. So it's really just camping out underneath the top of that swing point. Typical basic swing point analysis says whether you're moving into a swing point with or without volume, if you close inside it, odds favor that you'll go test one side or the other, in this case here, the upside. So we should expect and anticipate that we are going to see that March 1st swing point at least tested, 2,400.98. If we see it close above it, really the close would need to be above 2,405.77, the high from May 16th. Then prices can continue to run higher. Now, you say higher to where? I'm glad you asked me that question. The higher to where, what we have to do is just simply go take a look at our horizontal trading range boundary lines. These are the monthly. This is a monthly chart that we're looking at, so it goes back to 1996. Always important to take a look at this chart, especially as price starts to surpass resistance areas. What do I mean by resistance areas? Well, when we take a look at a stock chart, we like to go back as far as we can, put up as much data as we can, take a look at the left-hand side of the chart. The question is, was it ever trading near these price levels on the left-hand side of the chart? Well, we know the S&P 500. The answer to that question is no. What's interesting about this chart here, in the S&P 500, the real price level that is resistance, if we take a look at now, this data compiles all of the opens and closes, in this case here from a monthly standpoint. The largest number of opens and closes actually took place at the price point of about 1121. And so these horizontal trading range markets are going to do one of three things. They're going to go from left to right, lower left to upper right. They're going to go from upper left to lower right, or they're going to go sideways. Sometimes they can do two of the three. Well, in this case here, ever since the beginning of the year, ever since, quite frankly, November of 2016, we've seen just kind of a one-way move. There hasn't been much of a sideways move in looking at a monthly chart. But once price was able to overtake 2176, it suggested that the S&P would head to 2387. We're over that by about 10, 11, 12 points, just depending on which moment we're looking at. So this should be pretty stiff resistance on a monthly basis. However, if price is able to overtake this area, just as once price got above 2176, 2386 became the number, 2598 becomes the number. If we don't see any kind of a retracement or pullback and a move down below 2387, that is your S&P 500. In fact, if we finish off the S&P 500 and we take a look at just simply Elliott wave tools out here, the actual price projection is 2500. And take a look at wave number 1. That's your first up move. That really took place between the March lows, 2009, all the way up into the price point of about May of 2011. Then we saw a retracement, normal pattern inside the Elliott wave. Then you see wave number 3, larger than wave number 1. Well, it was larger in that it moved higher from the time period of October 2011 up until about May of 2015. Then what we can do is we can take a measurement of that retracement, wave number 4 out here. We go to the bottom of it, and what we can do is the measured move is equal to or greater than that first wave out here, just to keep things simple. Well, if we take a look at what that first wave was, add it to the lows of wave number 4, this says that price wants to head to 2500. Longer term, whether we get a correction or not, correction really just like a 10% guard variety, says that the S&P 500 is headed to the 2500 level. And when I say equal to or greater than, as an example, the NDX 100 has exceeded that same measured move. That price target was 5,300. We're at 5,700 as we speak right now. Where is the NDX 100 headed to? Well, the top of its next weekly, you'll notice these are green horizontal trading ranges. That doesn't come into play until we get to about the 57.83 level. This is Steve Rhodes filling in for Tom O'Brien. We've got the Dow up 57, S&P's up 6. We'll take a look at a couple of short-term charts when we get back from this break, because the markets are showing short-term the potential of a top. But I do say only potential. Steve Rhodes with TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 54. S&P is up 5. And all is not wonderful. So we took a look at some longer-term price targets out there. And each of you that are listening, your investors based on different time frames, some longer-term time frames. Probably everybody out there is managing their longer-term 401k account. So the messages that I provide to you or provide to subscribers of my newsletter service, Mastering Probability, really take a look at all 3 time frames. Take a look at the longer term, the intermediate term, and then the daily, what's going on from a daily perspective out there. So shorter term, one of the things that I'm taking a look at. First, let me go back and where is the S&P headed to? And we really took a look at that during the first segment. So where's the ES Mini? What are you going to be watching overnight if you're going to watch these markets overnight out here? Well, inside the ES Mini, it's going to be the next instrument from an indices standpoint that's going to go ahead and give us a tell. Because what we're looking at here are 4 time frames, 62, 40, daily, and weekly. So we've really got multiple time frames out here. And the one that I want you to pay attention, well, first, if you take a look at this, you'll see the current bar. These are bar charts instead of candle charts. You're going to go ahead and see that everything is green with the exception of the weekly chart. Now, the weekly chart, and I'm referring to this week, it formed a new market profile. Now, you might say, what's a market profile? It's a mathematical calculation. In summary, the easiest way to put it, simplest way to put it, most basic way to put it, mathematical calculation that helps identify, based on stock market data, where you can identify support, resistance, and an area where price is most comfortable with. In this case here, and when a new profile forms, you're looking at the structure of it, and you're looking to see where did it form in relationship to the prior one. Well, you'll see here, if I blow it up on the screen out here, what you will notice is that the current profile that formed this week, formed Sunday night, the bottom of the box is below the prior bottom. That's never really a good sign. It's kind of like a neutral-ish signal. And the top of the box formed above the top. That can be bullish to neutral. Here's the point I really want to make. 2404.50 is really its price target. And I expect we're going to see that tagged overnight or early in the morning or sometime at the open tomorrow. And the question becomes, can price overcome that resistance area? For those of you that work out in a gym, maybe you do curls, whatever it is, maybe you're running, whatever exercise you might do, you know that you have a resistance level. So too does the market. In this case here, the S&P futures contract has a resistance level of 2404.50. Since it's the newest resistance level that is formed, watch to see how price behaves there. That, in fact, could signal at least a short-term top, with price then pulling back to 23.61, even down to 23.26 out here. If price is able to close above that, that will be very bullish. Nothing more bullish than failed, we'll call it somewhat bearish patterns out here. There's nothing on the intraday, daily time frames as well, that suggests anything other than the fact that price is eventually going to get up there. Now, the ES Mini's trading out at 23.97 as we speak right now. Now, I had mentioned earlier about gold. When we take a look at gold, you can look at it a number of different ways. I like to look at it in relationship to what's going on inside the Japanese yen, because that is like a direct correlation between the direction of gold, silver, bonds, and the currency pair. Now, to prove that point out here, I just have to find one chart right here. It's called my yen-gold bond correlation. These are candlestick charts you're looking at on a 10-minute basis. The top chart happens to be gold. The center portion happens to be bonds. The bottom portion is the Japanese yen. Now, in this case here, we're looking at Japanese yen futures, and we're looking at futures because it's going to trade in the exact same direction as gold and bonds. You can see that correlation, the directional correlation. So it's not about the U.S. dollar index. Yes, the yen makes up about 13% of the U.S. dollar index. And not that that doesn't have an influence, but the influencing factor inside of gold, inside of bonds, inside of, metals, silver, even inside of, quite frankly, the mining sector out here happens to be the Japanese yen. So you see the correlation here. Now we go back and take a look at the same chart with those market profiles. Now in this case here, let me just do that. Let me just do this here easy. Let me just put up the actual futures contract. So we'll put up the 6J. Let me make sure. I'm going to put up the continuous contract here. It would help if all right, let me try one more time. Actually, if you what I know about my system is if you type in the wrong symbol, you're basically not going to get diddly out here. Now, here's the problem. When we take a look at the 60-minute chart out here, you can see that price is now down below support, the green profile out here. Not a good thing. That took place, a real wide-ranging bar back at about the 11 o'clock time frame this morning. One level of support has failed. The next level of support is up right now. It is being tested as we speak. And that is 89 cents. That is 0.89623. If this area fails to hold the support, gold, silver, bonds, the mining equities are going to continue to get hit. Now, you'd really be paying attention to gold, T-bonds, and silver in overnight action. Where's the next level of support as price moves, if price moves below that? It's really not that much further to the south. It's really at 0.89399. Still enough to see some damage inside the metals. But we're looking for one of these support levels to actually fail. If 0.89399 fails, then we're looking at 0.89029. Now, gold, I want you to know, gold is still bullish out here. I believe it's doing what it should do, which is come back and test its little convergence, its little price oscillator, which is the bottom panel of my chart, which is trying to get up to the zero level, and the oscillator unchanged, which really measures. In fact, there is a worksheet. There is a workshop that is on your members page if you are a listener here at TFNN. When I say listener, if you have ever subscribed to anything or signed up for any workshop, you have a members page. If you don't know the password, no problem. Just click on the Forgot Password button. One will be sent to you. You log on. You'll see a workshop that shows you the tools that I use the tools that are present at the beginning of every bear market. There's no bear market as we speak right yet, because those tools have existed for every bear market, and so they're not on the charts at present right now. But That's neither here nor there. We were talking about gold. So gold pulling back and testing this 1240. Let me give you the exact number here. Let me get rid of those lines. Let me do that. The exact number. I want to give that to you. This is a key area, 1245.90. Now, this number is going to change by pennies, cents, as price moves up and down. But we're really looking for this level, the 1245-ish area, if it gets tested, to hold as support. And it's all going to be about the yen. It is really that simple out here. At this stage of the game, you'd almost have to say gold is bullish to neutral. You get below 1245.80, that's a problem. Why? Because that price oscillator in the very bottom portion of my screen would be falling. There's nothing more bearish than a falling price oscillator below zero. We're not there just yet, but we want to watch this 1245.80-ish area and see how price either finds a bottom there, which I suspect it will, or if it fails, look out below. That is our look on gold. That's our look on the yen. In essence, that would really be our look in bonds. But in the case of bonds, let's take the 30-year Treasury. Let's just punch this up real quickly. And it needs to hold about the 152.98 level. You get below that, it's a problem in the T-bond future. Steve Rhodes with TFNN.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 42. S&P is up 4 points out here. So let's take a look at the shorter term. Let's even go shorter term. Let's go to this 2-hour chart. If we put together the market now, I am expecting the market to make a short-term top to last kind of a little while here. So the longer-term piece of the investment, the S&P or whatever you might be investing, still looks good. But when I take a look at the ES Mini, this happens to be the 120-minute chart out here. One of my favorite patterns to teach each of you out there is the price relative strength divergent pattern. I did that a week ago, last Wednesday, as a matter of fact, for subscribers. If that's something you'd still be interested in, you just sign up for my newsletter service, send me an email. We'll find some way for you to be able to gain access to that. It called the last top. This was right back here, right around noontime on May 16th. It called the bottom. This was last Thursday. Those of you that listen to the radio show that I do at 1 o'clock in the afternoon, or you're inside the Tiger's Den, you know how emphatic I was about assisting you in calling that bottom when all the fear was out there. It was a beautiful thing out here. Now we have the market. See, the market, the reason that we're pattern recognition individuals out here is because the market makes these patterns over and over and over again. That doesn't mean that these things don't fail from time to time. You just simply use proper stops, and it makes it trading easy. But these patterns work enough that you want to certainly pay attention to them. Well, we can see that the market has been, meaning the ES Mini on a 2-hour basis, has been moving higher in essence since about 4 o'clock this morning. Actually, 4 o'clock was the first signal that came in. So now what we're watching, it also happened to get to what we call wave number 7, kind of like a 7th inning stretch out here if you were to attend a baseball game. When you get to that 7th inning stretch, you take a little bit extra time in the stock market. That can be a place where you really can put the rally cap on and things change in the marketplace. That's why I like to call it that 7th inning stretch. Now, in the case of this price relative strength divergent pattern, as prices moved to higher ground, created that 7th wave. In this morning's newsletter service, this was exactly what we were anticipating, that this is what the outcome would be. What we don't have as we speak just yet at 3:32 in the afternoon is the required bearish reversal candle. And we don't have price closing below Stevie's red line out here. That red line being that oscillator unchanged line, again, something that I taught subscribers last week on Wednesday. Very, very important, because coming back and testing that level of support and rejecting it is a very bullish event out here. So you can see we're really trading on it as we speak right now. We're just in this last, this is the next 2-hour period. So the close at 4 o'clock is important for this configuration out here. Doesn't mean that it can't give us a sell signal overnight. Again, it's a 2-hour chart that you and I are looking at. Now, is this going to be the turn from a daily perspective that I'm anticipating? If we do even get that turn, I don't know the answer to that. You would stay focused on the 2-hour time frame. Whatever signal you get, you stay focused on that chart, and you look as that continues to move in order to make your adjustments and your stops, your targets, and so on and so forth out here. So that's the ES Mini. It's the area that I'm watching. So if this area here holds, then that 2405, 2404, something like that, then that continues to be the target out here. But I'll be watching this shorter term chart overnight. We don't have a signal just yet. In fact, we don't have signals in the 1 o'clock show. Let's go back and take a look at it. We looked at the advanced decline oscillator reading. That is the bottom panel of our chart out here. Bottom panel for both the New York Stock Exchange, NASDAQ Composite, and Dow. All three are above 0. And as long as they close above 0 today, the message is that buyers are the ones that are now really back in control, and prices should even continue moving higher. Higher through when? Well, I would say at least higher tomorrow. We're coming into a holiday weekend, could easily be through Thursday as well. I think we've got some Fed minutes that are going to be released tomorrow around 2 or 2:30, something along those lines out there. I don't anticipate that those are going to be the straw that breaks the camel's back, so to speak, even if the camel's back could be broken out here. But as long as that oscillator reading is above 0, it's suggesting to you and I that it is the buyers that are in control inside the market. So no real confirming signal. The last signal that you need, that is a must out here, is really going to come from the New York Stock Exchange. And inside the New York Stock Exchange out here, what you're going to look for is you're going to look for a close below that oscillator and change line, that red line. If we take a look at that price level right now, as we put this on the screen, you're going to see a price area of 11,568.79. Again, that number is going to change, as the market continues to trade. But you can use 11,568 as a pretty good area. You would need to see that at the close today at 4 o'clock if that was going to provide you and I with a bearish type message as a potential sell signal. Without that, you just don't have it. And what do? You stay long. You stay long. You don't take any action. You certainly don't jump to the short side unless you believe that you can actually call the top. You know what we can see out here is you don't need to call the exact top or the exact bottom. That's what that 120-minute chart really was able to teach us. It was able to identify when a change in trend was taking place. Then it was able to identify when a confirmed change in trend was taking place. Again, I'll put that back up on our screen out here. The indication of a change in trend was prices moving lower. That's that black line that was drawn out here in the bottom. The confirmation or the signal was that little bullish reversal signal. Then you had additional follow through, even though small, some follow through to the upside. Once price got above Stevie's red line, that was the confirmation out here. It worked the same way at the top that it last formed. It worked the same way at the bottom that it last formed. Did you have to sell the top tick? No. Did you have to buy the bottom tick? No. Do you have to sell the top tick now? No. Would it be nice to? Yeah, of course. Now, what kind of conversation is that I'm having with myself out here? That must be driving you crazy. But I got to have a conversation with someone. But I just want to be able to show you on different time frames, what the message of the markets are. In this case here, pay attention to the 120-minute time frame charts, especially for those of you that are intraday traders that are trading either the ES, the NQ, the YM, the TF out there, whatever it is that you might be trading. Let's go take a look at some individual equities out here. Let's take a look at some things moving really to the downside. AutoZone down $70, 10, almost 11%. 2.5 million shares behind the move. This thing is gap down. This is a large gap. This is gap number 2. Yeah, I mean, as my eyes see it, really gap number 2, so it doesn't look like a 3-gap play out here. Let's put it to the weekly time frame chart, and you can see that that trend has most certainly been broken out here. So now where is this headed to? Already 3.1 million shares for the week. So in the case of AutoZone, what you'd be looking for, boy, it's pulling already back into a swing point from back in January 2015. That had 1.2 million shares. So you're coming into a swing point with volume. If, in fact, you see AutoZone, it should at least test 569.54. If it closes below 569.54, then you're looking at a move down into the 491 to 512 area. Doesn't have to stop there, but that's what you would be looking for in AutoZone, having basically a horrible day inside the markets. Also moving to the downside, Alexion Pharmaceuticals. That's off 9 3/10% out here. Boy, with volume as well. Some people say there's no volume. We certainly have it in some of these equities out here. Alexion Pharmaceuticals headed into the 84.70 area. Tom O'Brien Show, guest host Steve Rhodes filling in. We'll be back in a few, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. Let's go out to Plymouth, Mass. and speak with Tom. Tom, thanks for calling. Thanks for holding. How are you doing this afternoon?
Good. Yourself, Steve?
Very good. Thanks so much for asking. And are you trading or interested in trading the USLV, the Velocity Shares 3 times long silver ETF?
I am. I got out this morning at 1348. I'm looking to maybe jump back in here. What you think about re-entering here?
Well, if we take a look at it, what I'm going to do here first is take a look at the silver contract. And let's go see what it's trading into. And what we'll do is we'll use a couple of different time frames. Now, you are primarily a fairly short-term trader.
Yeah, absolutely, yes.
Okay. Nonetheless, you're still going to be able to use this information to assist you in that trade. And what we're looking at specifically here is the silver futures contract. Now, what I'm first focusing on is the 60-minute time frame. And the 60-minute time frame, Tom, shows that it has broken through a level of support that it shouldn't have broken through in order for you to take a long position. That price level is $17.08 out here. So at 3:43 in the afternoon, if we saw that price was trading above that, then I would say, yeah, okay, that might be the place for you to go ahead and try to take that trade. Because it's trading below that, this chart suggests to me that price will go ahead and move down into about the 16.95 level. In fact, there's nothing that indicates that it shouldn't do that. So what I would say is watch for 16.95 in the morning. Now, that is us taking a look at, you and I take a look at a 60-minute and a 240-minute. I can change the time frames out here, and I'll do that. I'll just punch in a 30-minute as an example inside of silver, looking for anything else that would identify support. And in the case of silver, it's not there. It too is trading below a market profile. If I go down to a 15-minute chart out here, that's probably about as short of a time frame as we want to get. The level that should have held this support was 17.06. And because it has failed to do so, everything is suggesting that silver will at least see some lower price overnight. Now, I don't know whether it's going to find some support at the levels that we identified and then bounce from there. But I would make the trading decision based on the information that we have right now, which is that we should see lower price. We don't know if price is going to hold that level, and I'd come back to that trade tomorrow. So 16.95 is the number I'd be watching.
I'll sit on my hands till the morning and see where we go from there. Thank you very much.
You bet. And if prices trade below $16.95, sit on those hands even longer, because $16.55 is probably what's coming at you. Okay, those are the benchmarks that I would be looking at if I were you.
Perfect. Thank you.
You bet. That was Tom in Plymouth, Massachusetts, and that was our analysis of silver. And what we used there, folks, is we used a set of those market profiles to help us in an instant be able to identify some hidden, it's not hidden to you and I, but hidden levels of support and resistance out there. And it's just a really great tool. Now, this set of tools, by the way, that we're looking at, these market profiles, they're not going to call a bottom tick or a top tick, but what they do is they keep you out of one side of the trade. And since Tom is a shorter-term trader, it allowed us to go focus on some shorter-term time frame charts. Once we see the levels of support have been broken, we just look for where that next level is, where there might be some support that is found. That would anticipate, and I know that Tom utilizes tools like that, as he did to go ahead and exit his long trade earlier in the day. I had a request out here. It says from one of our members of the Tigers Den, Steve, if the ES Mini rolls a bit from this 23.99.50 high with leg G, that's what we looked at, that seventh wave on the 120 chart, would you care to offer a guesstimate of what decline level would be seen? So let's do the same thing that we just did out here. I'm going to go ahead and put the ES Mini on my screen. I'm going to go ahead and use the chart here that I like even better, because this is where I've taken all the prior contracts, stitched them together. So I've got a lot of data to provide us with that answer. And what I'm going to do here is I'm going to switch from the 4-hour time frame to the 120-minute time frame. And in the 120-minute time frame, the first level that we would be watching for, even though this is not a level I believe that you posted, if you did post a level, maybe you didn't, is the first level we're watching for as support is 23.91. So first we'd have to see that that topping pattern that we put in place in fact holds, gets below Stevie's red line out there. Then what price will do is just move down to 23.91. Now, that's not really a big move. That's only 5 points here. But that becomes the first level of support that then needs to be broken on that time frame, since that was a time frame that we were using to determine whether to take a swing trade, a short-term trade or not. Then if price gets below 23.91, what I'll do here is just simply step up the time frame to 240. It's a little bit longer time frame, and this says 23.88. Now, the beauty of this longer term time frame of 23.88 is that the structure of this box here that didn't begin forming until about midnight last night is this is a bullish structure. Jim, if you don't see the charts, I think all the signals are that the charts are out there, so I'm not sure what's going on, but the control room will just confirm that for you. And what I have on my screen is the 4-hour chart for the ES Mini. But as everybody else, maybe somebody else inside the Tigers Den can go ahead and ping me to the upside that you guys can see the active charts out there. And if not, we'll repost and we'll get it done. Nope, it's good. Okay. So they're out there. My apologies there, Jim. I'm not sure what's going on. But what you want to look at is this 240-minute charts. Because that structure of that box, let me just blow it up, makes it a little bit easier for you to look at. When this did form at about midnight out here, you can see that the center, that's a little cyan color, blue color on my chart out here, not sure what it's going to look like on your screen, is closer to the very bottom of that box, which is 23.8815. In fact, during the time frame here of between midnight and 2 in the morning, that level was hit. It held as support, and price went ahead and made its way up to the 23.94 level. Once it cleared 23.94, it said, hey, it was ready to pass the level of resistance, ready to go to those other areas. We looked at what that daily estimate was. So the next level below that would be 23.88. That's where I would drop down to. If this is the beginning of something more sinister, then what comes into play that we would watch after 23.88 becomes 23.74. And really, folks, we have to take this one step at a time, especially when buying the dips has been the thing to do. And it will continue to be the thing to do. But the market is under what would be referred to as some seasonal pressure out here. And that seasonal pressure, what typically occurs during the month of May, and it is not on May Day, May 1st out here, but more likely May 19th on average over the last 85 years, is where the market forms its May top. Now, in the early part of the show, I said between May 19th and May 22nd. I don't have my chart up here for first-term presidents, but first-term presidents typically see a cycle top around May 22nd out here. So I know we're in this time frame, but it doesn't mean that that's what the markets have to do, because the NDX 100, it can continue to lift all boats. In fact, what we'll do during this break here is I want to go ahead and take a look at how the QQEW is trading today. That's the equal weight for the NDX 100, which yesterday QQEW closed at a new all-time high, and the NDX 100 doesn't. It says there's been a heck of a lot of participation. It has not been 5 stocks or 6 stocks. It's been 108 stocks that have participated. Steve Rhodes from TFNN. Right?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. Let's go out to California and speak with Carlos. Carlos, thanks for holding. Thanks for calling. How are you today?
Very well, Steve. How are you?
Very, very good. Nice to hear your voice.
Thank you.
You're trading Nugget. Are you in the Nugget right now?
Well,
and
I am not.
Okay.
I'm just looking at the chart of the Nugget, and I want to ask you if my analysis is correct. I put up the daily chart, and I can see that it's a possible island top. And if it's not, can you please explain me the pattern that is in that area?
Sure. So,
Thank you.
absolutely. So, Carlos, I am assuming that you're looking at the May 17th level. Is that correct?
It is correct. It's actually, yes. There's one candle that it's not full. It's practically halfway, both ways.
Sure. So the strictest definition of an island top would be where you're looking at the high of May 16. The high was 36.10. So you're looking at the very next trading session for the low of that session to not get into 36.10. Well, that worked because the low of that session was 36.42. Then what you're looking for, because 36.42 is the low of May 17th, you're looking for the next session to not get into that price point of 36.42. And what it actually got up to as a high was 36.56. So technically speaking, the way that I take a look at gaps, and people have a little bit of a variance here, but the way that I take a look at it is it would not qualify for an island top. As an example of, let's say, an island formation, an easy one to look at would be J.P. Morgan. And in J.P. Morgan, it's very clear, in this case here, you don't see this too often, but it's very clear to see. What I would do, Carlos, is take you back to the trading days of February 10th, February 11th, and February 12th out there. There you can see that on the 11th, the date that was wedged in between those two, you had a gap to the downside. The high of that session never touched the low of either of the previous or the latter session out there. That formed an island bottom. And the reason that Carlos is asking about this, I would believe, is simply because an island top is a very bearish pattern. An island bottom is a very bullish pattern out here. The other
can I
thing.
ask one more question? I'm so sorry. Go ahead.
No, please go right ahead.
No, I just was going to ask you, and as in the past, we had the metals pulling back, and we had the minor metals, miners actually moving a little bit behind or ahead. I don't remember exactly, but they were not really going with the futures contract of gold.
Sure.
Do you see these times that they're doing something different? They're pretty much pulling back in congruence with the gold futures. So what do you think?
So I think here what I would be looking at, so if you're interested in trading nugget, and let's say to the upside or to the downside, what I would be paying attention to is the GDX, which it's really trading off of. And the price point that I'm looking, because I'm long some miners right now, the price point that I'm watching for the overall sector, Carlos, is 22.53. If price were to, I expect that we'll see that area get tested. But if price closes below 22.53, it suggests that the GDX will run all the way back down to the bottom. Sometimes the mining equities have a mind of their own, and really we should trade them as such. We should always be cognizant of what gold and silver are doing. But as long as gold and silver haven't given you a bearish message, per se, it would be okay to trade this to the long side. So 22.52, 22.53 in the GDX is what you should be watching for tomorrow morning. All right, my friend?
Thank you so much.
You bet. Folks, have a great day. Stay tuned. David White is going to be up next, and you can always listen to me each day at 1 p.m. here at TFNN, or you can catch the archives on Tiger TV. Have a great Tuesday. We'll see you on Wednesday.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
And welcome. This is Dave White sitting in for the one, the only, Tom O'Brien. We'll have Andy Heck in here at about 4:20. We'll cover kind of what's going on here. But for the most part, slightly higher in the S&P, up 4.4 points at 2398.42. NASDAQ 6138.71, up 5 points. Volume right now is coming in at about 3.4 billion shares on the New York consolidated tape. If we were going to bust higher, I've been looking for something like in the neighborhood of 5.5 billion shares. I'm going to show you something I do each day in the newsletter, probably in the last segment of the day, and we'll see that. But just mildly higher going into a 3-day weekend. This is not uncommon to go a little higher. Had a lot of stocks roll over today, though, kind of interestingly enough. I'm fairly bearish on the market, and that is because we've been going up with such light volume and light leadership. We continue to see a lot of days where the advancers are maybe just the same as the decliners. So the breadth is not what it should be. The volume certainly isn't what it should be. And then we're going to show you how the dollar amount has drizzled down to just about nothing. But as I always like to kick off my shows with a little bit of history.
There it's all just a little bit of history repeating.
On today in 1908, John Barden is born in Madison, Wisconsin, to an artist mother and a head of a university medical school. He goes straight from third grade to junior high, enters Wisconsin's engineering school at the age of 15 in 1947, co-invents the transistor at Bell Labs with William Shockey and Walter Brennan. Shockey was kind of the big cheese at Bell Labs, and these two other guys kind of took some of the stuff he did and ran off into the corner to beat him to the punch and then file on this. He kind of shoved his way on to the patent and never shared anything with these guys again. If you're familiar with electronics at all, you'll know that Shockey's got his name on a lot of different components and was really kind of the guy that got this all going. In 1956, all three shared the Nobel Prize on the 60th anniversary of Nobel's death and his prize. Shockey was one of these guys that kind of got his feelings hurt. He was the head of the labs. But very interesting that several years later they all got to share the Nobel Prize. And when we think about probably the biggest things to happen in the 20th century, nuclear weapons and transistors, probably the beginning of the tech generation. But I have to think those two things probably had more to do with the changes in all of our lives, even today, than anything else that was ever invented. And of course, all because of Nobel not wanting to be remembered as the inventor of dynamite. But that's about it. We're going to go on to some other stuff here. You can always give me a call at 877-927-6648 or email me at path@tfnn.com. Other things going on. Any minute now, we should see earnings from Intuit. I didn't check right away, but it should be out before 4:30. In the morning, we have Lowe's, and, of course, Home Depot already came out. Tiffany's, which will give us a little window into what's going on the high end. Advanced Auto Parts, also tomorrow morning, although all the auto parts suppliers got hit on another company that whiffed on earnings in that sector today. After the bell tomorrow night, we've got NetApp, NTAP, HP, Guess Jeans, and Williams-Sonoma. So there's probably maybe Lowe's in the morning. Might be able to put a little bit in or out of the market, but my guess is that's already probably baked in with Home Depot's numbers already in. So you're not going to get a lot of movement on that. So again, maybe headline risks, although the headlines that we saw last night and this morning didn't seem to do much for the market. Other things going on. Saved by the Bell, the communication software company, not NVIDIA, settled a dispute with Apple this morning. Nokia is what I'm looking for. I forgot to put that in there. Nokia and Apple settled their patent disputes, and this is probably more of an issue of Apple, i.e., Apple wouldn't be around if Microsoft didn't lend money to Apple. They were going broke. Microsoft needed a computer company to compete against them so that they didn't get sued for antitrust. I suspect that this finishing of the patent issue with these two is something similar. It just doesn't cost them any money, and it's not really going to make a difference between them and Nokia. So at least one patent issue is out the door. Of course, we were talking about auto parts retailers this morning, and the AutoZone really kind of whiffed out here, $11.44 per share, short of the consensus of $12, and that put a hurt on all of them this morning. And, of course, Agilent beat by 10 cents this morning. They're all about A, G's, T's, and C's. If you know anything about DNA. Beat by 10 cents, adjusted quarterly profit of 58 cents per share. Medical equipment and technology company also saw revenue come in above estimates and also raised its full-year guidance as its chemical, energy, and pharmaceutical business saw good growth. We'll take a look at that chart. We'll go to break, and we will talk to Andy Heck about commodities here for a while. Of course, he'll have his full show at 5 o'clock. And again, this is a pattern I talked about in my 2 o'clock hour show, and that is a lot of these stocks did today pierce and go higher, but they, by the end of the day, have pulled back pretty much either at or back under the trading range that they were in. In the case of Agilent, you had all the volume in the world. You only need about 1 million shares to go through the May 16th high. You had 7 million shares, and yet maybe a few pennies that held the high, but it even pulled back throughout the day. And I think that's kind of the tail that we saw in many of the charts. And we'll talk about that probably in the last couple of segments as we go through a few others. We'll, of course, watch for the earnings coming out after the bell and talk commodities here for the next 2 segments with my friend, a brother from another mother, Andy Heck.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648.
And we're back. And today we had a big mover. The company was Bunge. This company, together with its subsidiaries, operates as an agribusiness food company worldwide. It operates through 5 segments: agribusiness, edible oil products, milling products, sugar, bioenergy, and fertilizer. And we've got somebody that kind of knows this stuff and wants to opine on it. It's my friend, my brother from another mother. It is Andy Heck. How you doing today, brother?
I'm doing good. How are you, David?
I guess if I was any better, I'd just be excellent.
That's great. I'm glad to hear that. I'm always happy when you're happy.
Oh.
So there was a good introduction. Of course, a great introduction to me. I appreciate that. But very good introduction on the big mover today, which is Bunge. And I want to talk to you about that a little bit, as well as some other things. But that certainly is the big news in markets today. And Bunge shares, which were trading over 80 back in March, they dipped down to below 70. And with today's news, they're back up at around $81 a share. And the news was that the Swiss commodities trading giant, Glencore, which is the child of Mark Rich, who actually started the company as Mark Rich and Company in the 80s, has expressed their desire to purchase Bunge. And I think that this is a dramatic course of events for the agricultural sector.
How close was Glencore to going out of business, whatever it was, a year or a year and a half ago?
They were pretty damn close. The stock went down to $1.95 a share. They were sitting on a mountain of debt that they took because of the Estrada purchase back in 2013, but they got their financial house in order very quickly. Let's talk about a couple of things they did. The first thing they did, Dave, is they cut expenses. They sold the Las Bambas copper mine in Peru to the Chinese for $7 billion. They sold a 49.9% stake in their agricultural business, very interestingly enough, to two Canadian pension funds to raise about $3 billion. So they raised about $10 billion to reduce debt, which put the company back into good shape. And the stock rose from just under $2 to $8 a share. I mean, it was up about 350% over a 1 year period. Now, the stock has come. Yeah, go ahead.
I was just going to say, so this wasn't a chainsaw Al Dunlop kind of thing of financial engineering. They actually did get their house in order.
They did. They did. These are smart guys. These are smart guys. And let's talk about some of the recent deals that they've done. They got in the middle of the Russians, of Rosneft, and the Qatari Sovereign Wealth Fund. And for a 300 million euro investment, which, by the way, in the oil business, it's pennies, okay? They basically have control of a lot of Qatari oil and Russian oil from this joint venture, and a great relationship. As a matter of fact, the chairman of Glencore, Ivan Glasenberg, was given the Order of Friendship by Vladimir Putin after that deal earlier this year. So they're in tight with the Russians. And the Russians are big players in the grain markets, as you know. They are big. The Russians and the Ukrainians are big wheat producers. But let's talk a little bit about the potential for the takeover of Bunge. Bunge is an $11 billion business. And you did a good job of kind of outlining for the listeners the businesses that they're in. But one of the biggest businesses, first of all, Bunge is very big in Brazil, and they're very big in the United States. Now, they're one of the biggest companies. I think they're the biggest in Brazil. They are one of the two biggest in the United States, the other one being Archer Daniels Midland, when it comes to agricultural processing, which means taking soybeans and turning them into soybean meal and soybean oil, which means taking corn and turning it into ethanol in the United States, which means in Brazil taking sugar and turning it into ethanol, which is, because Brazil is the largest producer of sugar in the world. Now, between the U.S. and Brazil, you have the world's leading producers of corn, soybeans, coffee, and sugar, and some other agricultural commodities. This takeover, by virtue of the fact that they already have an agribusiness that's valued at $6.25 billion as of last year, the addition of the $11 billion Bunge business, in my opinion, Dave, is accretive. And it will make Glencore's total agribusiness vault to over $20 billion because of the control that they will have in the global markets. I think it's a fantastic deal if it goes through for Glencore, and I will be a scaled-down buyer of Glencore shares because of this deal. Now, let me tell you something else. I also think that they have an exit strategy going here, Dave, which, whenever you do a trade, every trader has to have an exit strategy. And when you're talking about Glencore, some of the world's best traders, listen, they own a lot of production. They own a lot of infrastructure in commodities for everything from metals to energy and now, agricultural. You have to have an exit plan. Very interesting. When they sold their agricultural business, that minority stake of 49.9% to the Canadians, guess who was second bidding for that business? Take a guess.
Who's on first?
Okay. The Saudi,
I have no idea.
The Saudi Sovereign Wealth Fund.
Okay.
Now, we all know that the Saudi Sovereign Wealth Fund is going to get a big injection of cash in 2018, when they IPO Aramco. So Glasenberg and company sitting in Switzerland know that if they put together a really nice accretive deal here, that they will have be able to offlay some of the risk and take a very nice profit in late 2018, perhaps early 2019, by selling that to a very hungry Saudi sovereign wealth fund that's looking to diversify away from petroleum and has already expressed interest in the agricultural sector, but unfortunately lost out to the Canadian pension funds. So I think this deal is a home run for Glencore.
And now, you were talking about the exit strategy. I did hear something a few weeks ago, maybe even a month ago now, and it's Art Cashin. He said something that was pretty brilliant one day, and I try to pass it on when I can. But he said, men of a certain age in the markets do one thing. When they start to enter a room, the first thing they start looking for are the exits.
Right.
And what's the exit strategy here for Glencore and some of these others?
Well, you mean the exit strategy from this agricultural deal?
Yeah, I mean, are they going to try to build themselves back up like they were before, or is this?
Oh, I think they look at their business as a group of verticals. They have a very active coal vertical, very active base metals vertical, very active energy vertical, and now they're building a very active agricultural vertical. Now, the exit strategy with the agricultural is to sell a big piece of it to the Saudi Sovereign Wealth Fund, in my opinion.
That's what I was wondering. We'll be back in just a minute. We're going to go through at least one more segment with Andy Heck. This is Dave White sitting in for the one and only Tom O'Brien.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And this is Dave White sitting in for the one and only Tom O'Brien, who will be back tomorrow. And we've got our special guest, as always, on Tuesday, and that's Andy Heck. Let's pick up where we left off.
Let's pick it up. Go ahead.
Well, what else do you want to talk about today?
I thought you wanted to talk a little bit more about Bungie. I mean, I'll tell you, I think this is a big one.
Okay, tell us more. Give me a full report.
I'll tell you more. Well, I wanted to talk a little bit about Bitcoin because I heard you talking about it on your show.
Okay.
And you know, I write a lot. When I write for Seeking Alpha, I write a lot on Bitcoin because I've been really interested. I like markets that move. Hey, that's why I'm a commodities junkie. And Bitcoin, nothing's been moving like Bitcoin. You know, I mean, David, if you invested $100 in Bitcoin in 2010, right now it would be worth $3.815 million. Now, whether, you know, some people call it a Ponzi scheme, you call it Beanie Babies, I call it a tulip bulb mania.
Well,
the bottom line
is, let's make sure, as long as you didn't have it in the Japanese broker, you might have your 3.5.
Well, yes,
yeah,
exactly.
So some of those brokers went out and you lost everything.
Yes.
Okay.
But you had it in those brokers. But if you kept it in your own computer wallet, you still have it.
That's true.
Yeah.
That's true.
So the bottom line is, you know, I have no idea. Can that thing be $1,000 lower tomorrow? Absolutely. Can it be $1,000 higher? Absolutely. I think it's a very important thing. First of all, I think that you and I would agree that the most important thing, the most innovative thing that really comes out of Bitcoin is the blockchain technology, the distributed ledger technology that will eventually revolutionize the way operations are done on Wall Street, maybe for many, many other businesses around the world. I mean, do you agree that that is a very important kind of achievement of this Bitcoin whole frenzy?
Yes, and we probably ought to explain what that blockchain is.
Sure,
and
go ahead. You explain it.
Well, you want to think of it as a set of books that everybody has to agree on before anything else gets put in the ledger. So it is a very interesting technology in that if everybody doesn't agree, it doesn't go forward. And
exactly.
that is a very interesting way to make sure that everybody that you're dealing with is up and on the level. It makes the double entry bookkeeping kind of a thing in the past.
Yes, I call it PPT. Perfect. I forgot what the mnemonic is for, but it's perfect. It is a perfect paper trail.
Perfect paper trail.
That's what it is. Perfect paper trail of ownership. That's what it does. And I mean, it would be amazing for regulators to use that. As a matter of fact, last week, the CFTC opened up a fintech division where they are looking at distributed ledger technology to help with their regulation of markets.
The other thing that a lot of people think that where this would work very well are things like deeds of trust, titles, anything where everybody has to know that somebody has ownership or possession or an amount that someone else owes. So it's fairly interesting stuff. It really
is. And I think, yeah, go ahead.
I was going to just say that a lot of people think that this is totally not transparent or traceable. But the answer is not. That is not true. There have been several people, especially the guy that ran the Silk Road dark website. They were able to trace hundreds of millions of dollars through his account. So a lot of people think that it's used for drugs, and it is. And so there's some other illicit things. But when it got big enough, the government did spend the time to go back and figure out who owned what, and did track down and put those folks in jail. So it's not as opaque as it once was. If you know what you're looking for, these people, it can be tracked back down. So if you are doing things illicit with it, you can still be found.
Exactly. So drugs, arms, and by the way, if you ever have been subject to any ransomware, you'll know that the ransom is payable only in Bitcoin. So very, very interesting. It's done a lot of illegitimate reasons, but a lot of legitimate. In Japan, almost every merchant accepts Bitcoin. In Europe, a lot of merchants accept Bitcoin now, and it is growing. So the question is, and the CFTC has validated the DLT, the distributed ledger technology. A lot of central banks are certainly looking at it and have kind of condoned it. And the bottom line is, I think what's happening is blockchain is validating Bitcoin to some extent, and Bitcoin is just zooming to the moon. And is it a bubble? Of course it's a bubble. No question about it. But it's also, folks, a commentary, David. David, it's a commentary on fiat currencies, in my opinion. Because, I look at Bitcoin as it's like a drone, a financial drone that flies below the radar of the central banks, monetary authorities, governments, regulatory bodies of the world. And a lot of people have very little faith in the currency system. And I think that Bitcoin's telling us in essence, that fiat currency is becoming less valuable, because Bitcoin is becoming much more valuable because more people are using it. There is, this isn't a market that operates strictly on supply and demand. And the price goes up because there's more buyers than sellers. That's the bottom line. And it's become a hot potato.
It has. But we also need to know that something majorly changed in Bitcoin about a year ago. And that was that you used to be able to set your computer up to run a program that would find out certain hashes. Basically, it would break codes. Mm-hmm. And they changed the amount of how many of those that they were going to give out, and how many codes you literally had to break before you got a Bitcoin. So suddenly, it's probably going to be for a while more expensive to actually just in electricity to solve those codes.
That's mining for them for free, but there's no free lunch anymore. You got to buy it. To own it, you got to buy it.
Once they started moving those up, it really meant that there wasn't a new supply coming in. Mm-hmm. And if you had any more supply on the backside, then you can get these kind of pets.com bubble, musical chairs, as you call it, hot potato. But to me, it smacks a little bit more of gambling and a little less of intelligent speculation.
Yes, the next thing coming for Bitcoin is a major split. I think you're going to see a 10-for-1 split, which will bring more people into the market. You do a 10-for-1 split here, a reverse split. You just increase the supply of Bitcoin. I think that's the next thing coming for that market.
Who would say that they were going to do a 10-for-1 split?
That's a very good question. I don't have the answer to. But
I don't think anybody does. Do you want to hang on for a little more, or you're done?
I'm happy to hang out with you. I stay with you for always.
Okay. We'll be back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
And this is Dave White sitting in for the one and only Tom O'Brien. We're talking with Andy Hecht. Gold's off $10 today. Any comment on that, Andy?
It's come a long way. It's right at the midpoint of its range. I think Bitcoin's a comment on gold. I kind of like gold here. I kind of do like gold. But I really wanted to switch gears and talk about oil because I know we were talking about that on the phone this morning.
Yep.
And I think I've been, over the break, I was desperately mining around to find out what those API numbers were. But they are apparently very bullish because crude oil is moving higher, up above 51.50 here, going into Thursday's OPEC meeting. And I just wanted to, chat about OPEC a little bit because, the schmoes at OPEC, or as you like to call them, the Schmopec brothers, they are getting together on Thursday. And, I think we all know that they're going to extend these production cuts to for the balance of the year. The Saudis and Russians kind of told us that a couple of weeks ago when oil was still, looking like it was going to go flush down through $40, and it held below 44. But I think that the only surprise we could get out of that meeting is if they come out and say that the production cuts will stay in force into 2018. Which I think could cause crude oil to rally to $55 to $60 if that were to happen. But I think that's low odds. I think you'll just get an extension to the end of the year, and you might get a sell-off back down to the $50 level, which I think is the sweet spot for crude oil until this Aramco IPO.
Well, this is the question I have because I've been looking at a lot of the charts on these offshore drillers. And the question I wonder is, even if they do a short period of cutbacks in the Mideast, my thought is that they're going to just start cheating, and eventually that'll all fall apart like it did in the early 2000s. I remember it was every man for itself, for themselves in the Mideast, and sometimes OPEC kind comes and goes as to how powerful it is, depending on how they stick together or how they hang separately. And my question is just, is there any time that we see in the near future that the shale oil and the other oil available in the United States is not going to be of significant amounts enough to ever get offshore oil, and these drillers, are they the coal companies of 2017 and 2018?
Well, there's a couple of things going on there. First of all, the shale wells, they produce. First of all, they produce very rapidly and they tail off very quickly. You know what I mean? The oil doesn't. It's not like an old-fashioned oil well where you stick the thing in the ground and it just pumps and pumps and pumps evergreen amounts of oil. This stuff pumps a lot nearby, and the rate of decline is very fast. So you got to keep finding new areas to drill, and the horizontal drilling has certainly improved the technology, and so there is some validity. The point there is that as long as global GDP growth is very, very low, it continues to be very, very low. If you do get infrastructure building here in the U.S., if you do get a spike up in global growth, if you get GDP in the U.S. up to 3%, oil demand is going to go along with that commensurately. And that will offset, even if the Gulf states and the Iranians and the Libyans and all these characters, start pumping again without abandon, and the Russians as well. So, it's a function of demand as well. You're still in a weakish demand situation with Europe so weak. But if you do get some growth, that will eat up whatever additional production comes out. I think for now, predicting prices, Dave, into the long-term future is so difficult. I don't even try to do it. I think for now, the most important thing is that the Russians need petrodollars. The U.S. wants energy independence. I mean, we're happy as a country if oil goes down to 40 or 30 bucks a barrel because we'll just buy foreign oil. That'll support it. And if it's above 50, we'll pump our own, and that'll depress it. And I think right now, sweet spot, 50 bucks.
So if you were thinking the next 6 months or a year, which I think we can kind of look at, is there any chance that these companies are just not destined for the dust bin of
the offshore drillers are going to have a tough time. I think you're right. Very tough time with all the shale. But in the long term,
I'm just wondering how much, let's say it's 50, 55 bucks. Is there so much out there that it just never makes sense to drill offshore again, especially with the BP incident?
I think that I agree with you. I think it might not make sense for the foreseeable future. Listen, even President Trump is talking about selling out half the SPR now.
Really? When did he say that?
You didn't see that? He said, I think yesterday or the day before, I saw a news item that he said that maybe we should sell half the Strategic Petroleum Reserve. I mean, what is that? About 800 million barrels, 700 and change.
I know there's only a few more times that we can empty those before they actually all crater in, right? They're old salt mines.
By the way, you have to. It's like a pool. You can't let the water sit there. You got to continue to revolve that oil in those salt mines. But I don't think it's necessarily a bad idea to sell some of that. Listen, the U.S. is flexing its muscle in the oil market like it's never been able to in the past. We're really in, between us and the Russians, we are the driving force. OPEC is a toothless tiger. And now, the Russians kind of are leading Saudis around by a leash because of the IPO and their fear that the Russians could crater the market. And the U.S., because of our military assistance to the Saudis, they don't want to step on our toes. So the real power in oil is now the three biggest producers. OPEC, what do they produce? About 34 million barrels a day? Well, between the U.S., the Russians, and the Saudis, it's not far off that amount. So the power base has really changed, and OPEC it's a very nice meeting they'll have in Vienna. They'll eat some pastries, they'll get together, they'll kiss each other on each cheek, and they'll do as told. And that's basically what we're going to see Thursday.
What do you think if crude's in the 50 to 55 range, they can ever kick that IPO out?
Oh, yeah, I think they will. I think
get it higher to really get somebody else to buy it?
I think I think $50 to $55 is a sweet spot, and I think they get their $1 trillion valuation at 50 to 55, as long as the market stays stable between now and then.
Okay.
Who was the head of Ringling Brothers Barnum and Bailey Circus? What did he say? There's a sucker born every day, or was that W.C. Fields?
I think both of them.
Right. The bottom line is, people will buy that Aramco IPO at $1 trillion valuation. And if the Saudis are smart, they'll sell 10 or 15%
of the shares.
Yes. I mean, they say they're going to sell 5. They should diversify. They should sell 10 or 15% if they get their $1 trillion valuation. Why not?
What do you think the stability of owning those shares is worth if they get overthrown? It's probably worth.
I got to tell you something. I think they should hire Jack Ma as a consultant on the IPO, David, because Jack Ma. They should do with Jack Ma. They should open it, get it out, trash the price of oil, and then buy all the shares back, like Jack Ma did in Hong Kong. How's that sound?
That's the way to do it. Thanks. Andy has his show on at the top of the hour. Make sure and listen to it all. We'll be back and close out this show. Thanks, Andy.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
This is Dave White sitting in for the one and only Tom O'Brien. If you're just joining us now, the NASDAQ closed up at 2398 on the cash. The Nasdaq, where's that? 6138 up 5 points. Volume was extremely tepid, as it's been for the last 3 or 4 days. It's declined every day. This looks like it will be. I'll have to check the numbers tonight. But in fact, yesterday, we did only about 2/3 the dollar amount as we did on Wednesday last week trading. After the bell, we saw Intuit with earnings. Intuit got around to it and is trading out at about 138. 138.72 is the last tick I show, which is fairly good. Tomorrow, if you watch this, you need about 3.5 million shares. It's up $10, probably pretty good sign. Their earnings call starts here at about 5:15. So there may be some one-liners or comments after that you need to check out. But take a look at that one. And, of course, what we have in the morning, wanted to look at a few others reporting. We've got Lowe's, so let's take a quick look at that one. Opening in the morning. Now, this one already came down a bit today and had some decent juice. Tiffany's is the other one, TIF. I think the housing numbers kind of put a pall on Lowe's. Tiffany's not doing much today, a little lower. Volume did pick up into earnings. Resistance comes in at about $96. I don't see an edge in this either up or down. Advanced Auto Parts, as we already said, there was a brethren, AAP. There was a brethren in this space that didn't do well. It came down on fairly strong volume of 3.9 million shares, right back at the support level at about $140. And, of course, tomorrow night we get into HP. So let's take a quick look at that one, HPQ. This is this coming up. What you don't want to see is this thing pull back at all. If it does, it looks like about $17.75 in HP. They have some new technologies that will be fairly interesting. No one's actually seen them yet, so that means they're probably still a little far off. They may be talking about that in their earnings call after the bell tomorrow night. And Williams-Sonoma, WSM. So this one's already back down to its sign of strength that goes back to the 29th of March this year. It started going up 2.7 million shares on the 29th. On the 31st of that of March, you had 3.4 million shares. So you had some very strong moves up, kind of a nice move, a slow move back down. Now today, you're just sitting at this support level. So this one is one that on the high side, if earnings are good, maybe $52. The problem is if this thing would whiff, $46 is the real next support level down below on this one. Few more on Thursday, but we're going into a 3-day weekend. Volume should start to decline tomorrow. We've got the FMOC meeting notes tomorrow at 2. Oil numbers at 10:30. Those numbers at 10:30 tend to trump the API numbers that we got tonight. So whatever the 50-cent bounce in crude tonight could easily be negated tomorrow or even added to at that 10:30 time frame tomorrow. But other than that, probably a headline-driven market on thinning volume the rest of the week. Tomorrow, Tom O'Brien will be back in the 3 and 4 o'clock hour. As I like to say, sell when you can, not when you have to. And I'll see you tomorrow on TFNN at 2 p.m. St. Pat Channel, St. Pat time.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.